Canada seeing some inflation cooling is a good sign for gold. Remember that gold does not trade strictly and solely on the US, even though the US dollar is a huge, factor to how gold trades. It's not actually the only thing that impacts the price of gold. You can see clearly the market for gold is actually cheering inflation cooling off. Now, what I've said a lot of times on this channel recently is that I don't know whether or not the slowdown in economic prints and inflation prints is something that is just going to go like this. So let's say that this is the economy for a second, and let's say it's the global, we're going to put GECO, global economy, has been relatively strong. And in the possibility of getting inflation under control, it's pretty apparent that the market needs to see, the economy just at least moderate, slow, in order to get inflation under control. Okay. So the thing, however, is I don't know if this is possible to do before the economy just proceeds to grow again. Let me back up and say that. I didn't say that very well. Let me try that again. If growth is really strong and you need to get inflation under control, you need to see growth stall or just pause for a little bit. But I don't know if you can get it to just pause a little bit and then it just proceeds. I think what very possibly could happen is that it slows, but it usually, when the Fed does something, they usually overdo it because it's just hard to predict what markets are going to do. So when they start slowing the economy finally, I don't know that you get to see this, right? Just mild slowing and then we shoot off again. I think that what we could see is we could see a bit more prolonged slowing than people might expect. Because again, the Fed doesn't know everything. The Fed has been cheered a lot in the last few years for potentially pulling off what looks to be a bit of a soft landing. But the question is, how soft is it really going to be? And if it's not actually that soft, meaning you don't see this and then just, we're back to, rainbows and sunshine. If you in fact actually see more like this, that's an environment where I want to be long gold, because in that situation, stocks might not be, going straight up. If you do start to see the economy and thus earnings start to slide a little bit, stocks might not be the holy grail that they have been for the last few years. That being said, I've mentioned very clearly, I don't know. I am not a fortune teller of what the global economy is going to do. I simply react to the trends that I'm seeing. So that being said, I own both gold and the stock market. Okay, so I am long VOO. So here's my VOO. This is the S&P 500 position that I have from the pullback that we saw in April. I built a position, and I also have an aggressive sized position on gold, which has worked out very, very nicely for me. You can see the trade is floating around $17,000 at the time of us streaming here. So trade's working out pretty well, but what am I doing with it? Well, let me pull up gold and I'll show you. On the 4-hour chart, what I'd like to see is, again, we're doing very simple handling of this trade. I did a whole rant yesterday just talking about how when I finally have a good trade, like a really good runner on my hands, I'm very careful not to screw it up. So I talked about yesterday, a lot of people started getting really bearish on gold on this candle. And I made a video yesterday. You can go back and watch it if you'd like. And I pointed out that when looking at the price of gold, this did not faze me whatsoever, because this doesn't tell us that the whole party is over, right? Because it's so hard, and I've made this point many times, it's so hard to call the top on gold when it's in an uptrend. Same thing with the NASDAQ, same thing with the S&P 500. Trying to call tops in a roaring uptrend is so dangerous, and so many people lose so much money trying to do that. In fact, guys, let's check. I'm just curious to see what retail sentiment is looking like. Gold is kind of mixed right now. I was actually surprised by that. I thought that maybe, we do see a slight shift, slight preference for retail traders shorting gold. I believe that when gold was making, fresh highs, this actually was more polarized. I think at one point we saw like 65, 35 or whatever, towards retail traders shorting gold. But a common trend that we've noticed here on the channel is that usually when something is screaming higher, retail traders typically just short endlessly, right? They just keep taking L's and adding to a loss and hoping that the market will reverse. But this trend is well supported in my view. I stand strong on that. I have stayed bullish for like a month and a half now on gold.
We have 4 brand new indicators built for TradingView, introducing the momentum, extension zones, trend projections, and volume spikes indicators. All 4 indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All 4 are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today.
When we go to the top setups page, I want to see gold stay as a bullish reading on the Edge Finder. What's getting us this bullish reading is the commitment of traders data shows that institutional money still is very bullish on gold. Seasonally, it's a good time to stay long gold. And in fact, let's go through this. Why not? We've got the time. I want to explain this trade so that, I know that a lot of people probably are tired of me talking about gold and talking about my position, but I am also trying to do the best I can to explain this trade in depth so that maybe, for my own selfish reasons, I want to reinstate what got me into this trade so I can do it again, right? At the end of the day, somebody who's going to be trading profitable needs to be able to do something repeatedly. So let's study this trade and what got us here. So if I look at the commitment of traders data first, this is the stuff that got me here. And again, I know sometimes people will say, well, Nick, you're just showcasing the Edge Finder and you're trying to sell the Edge Finder. And that is true. I am absolutely trying to sell you this product. But I also genuinely, wholeheartedly, this is what I use to trade. This is why we built the Edge Finder the way we did. It is how I spot my trades. So the COT data, let's go through it. Gold has in terms of the futures contracts tracked by the commitment of traders data, 79% are long contracts. So that right there from the non-commercial side of things shows institutional interest is to the long side when it comes to gold. But let's keep going. Let's scroll down here. This is the latest weekly filing. So in the latest week, we've got our short contracts traded and our long contracts traded, okay? So they added nearly 5,500. Now this is not contracts. I think these are maybe lots of 1,000. I'd have to check. But they significantly added long contracts and they just mildly increased short contracts. On a net basis, you can see there's 277,642 versus the short, there's only 73,146. So some institutional traders are still bearish on gold. They're not all uniformly bullish, but the majority, and this is how we track the COT data, the majority is long. On the last 10 years, it's usually been a bullish month. Now, May, we've got a little bit of time left in May. June is flat. July is flat. So we don't get much to boost us in the months of June and July, but May is still alive, and we've had a really good delivery in terms of seasonality this year. Seasonality has been pretty spot on in the last few months, okay? So again, seasonality matters. We talk about seasonality very often, and just I'm not going to get too far off course, but let me just point out also another really important seasonally thing is the S&P 500 is entering a really seasonally good time of the year. So that's part of the reason why I'm also long S&P. Just wanted to mention that while I'm on the topic. So seasonality is really key. If you have the Edge Finder, just go to seasonality. The one I'm looking at is the month of year trends. Okay, the other things I want to talk about just briefly when talking about gold is that gold, remember, if the economies of the world look like they are declining or even normalizing, even kind of slowing down at all, that is usually considered bullish for gold, because again, gold is an alternative. It's a safe haven investment. Traders, investors may park money in gold if they're concerned about the economy, if they think a slowdown or a recession might be on the horizon. It's kind of like a buy the rumor, sell the news sort of thing. And, when we look at GDP, we do see we had our first kind of miss. Advanced GDP numbers will probably get preliminary pretty soon, I think. But my point is this, again, the economy out of the US seems to be showing signs of slowing. And don't just look at GDP data. We can also look at purchasing managers. This is a forward-looking indicator that I really like. It's a survey of purchasing managers in the services and manufacturing sectors. And we can see some slowdown in that because, again, the numbers came in lighter than forecasted. Retail sales also bode a little bit poor for the consumer. Retail sales came in lighter than anticipated. Next up is jobs. So jobs, we'll get, of course, our next round of jobs pretty soon as we go into the month of June. But jobs data has come in light. Okay, so light job data for the first time in a while. In fact, I built this secondary chart here. This was our first significant miss on magnitude-wise on jobs in a little bit of time. So jobs growth slowing down, and I could keep going down the list. I mean, we could take a look at unemployment claims. Unemployment claims have ticked up. Job openings have been trending lower in the US. Unemployment rate has been trending higher in the US. So all of that to show you guys, again, at the end of the day, when I place trades and I show you guys my trades on live streams, I'm showing you my hard-earned money in the markets. And the reason I show you these is because also when you see me using these tools, these software tools, I am genuinely putting like my hard-earned money and my career on this tool, on my trading strategy, my trading approach. I point that out because I don't think a lot of influencers do that in the trading space. They don't show you live brokerage accounts. They don't show you, what they're doing. They don't, point out both the wins and the losses. And I say that, of course, not just to pat myself on the back, but for you as a viewer, you should have enough respect for yourself and for your time that people that you listen to, learn from, and purchase from should show you live accounts, in my personal opinion. There's a case to be made for the dollar still looks good relative to its peers because other countries are going to cut rates, but that's been the known fact. Now we've got new information. Now we've seen, again, data starting to cool out of the US. So there's a little bit of a rebalancing trade, I think, for the dollar that's starting to form. The dollar, has had a really good stretch for a while, but on a longer term basis, it's pretty dang range bound. So I don't know. I think for now, there's a little bit of a downside for the dollar. I've been on that trade for a minute, and we'll see if it sticks around. Here's oil. Also, oil down near 1% today. Gold flat on the day. Silver just slightly green. And again, Bitcoin might be crossing its highs pretty soon. We are trading just shy of 72,000. The previous all-time high is right there at just about, let's call it 74,000. We'll see if it can try to break higher. Euro USD has been moving higher here recently, pulling back a little bit. Pound USD seems like it wants to be breaking through this level of resistance. Might be headed up a little bit higher in the meantime. Again, momentum right now, in my opinion, favors dollar bearishness. If something changes in the data, of course, again, I am agnostic to what direction. I'm just looking at the data. I'm just following what the system is showing me. Speaking of system showing me, again, dollar Swiss on the bearish side, US oil, still bearish overall. Bitcoin actually coming in as a bearish reading again. Gold bullish, euro, pound bullish. TLT, so this is the 10-year treasury bonds. TLT is a 20-year treasury bonds. Generally speaking, I'm going to be bullish when this is bullish. This is saying that 10-year treasury bonds are looking bullish according to the Edge Finder's calculations. Again, economic data showing signs of slowing means yields might come down, and hence bond prices would go up. Remember that bonds have an inverse relationships to the underlying yield that they offer. The DAX is bullish, Euro Aussie, Euro Yen, Euro CAD getting bullish readings. Silver bearish, copper bearish, US oil bearish, and dollar CAD very bearish. So kind of interesting there, dollar CAD. Although I don't really like that trade. I have mentioned I'd like to see this thing break support before getting any sort of involvement. What are you watching today, Ivan?
Anything that it's stronger than CAD, I think, is my strong today. I was trying to find. There was somewhere on Financial Juice that said that it was priced in 48% of chance of having a rate cut in June, and by this now, I think we're gonna go closer to 90. Sorry, closer to 90 being having a rate cut in June. So anything CAD weakness, though it didn't. It went in line with expectation, but still 2.7 is 2.7. So that is great.
Yeah, and I noticed also that the core value, or the let me see where I've got it pulled up. Bank of Canada Consumer Price Index core year over year did come in pretty significantly light, 1.6%. Some progress on the inflation front. Gold initially liked it as well. Which currencies, if you were to trade the CAD, are you looking at the dollar? Are you looking at pound? What are you thinking?
Well, pound came out with a very good GDP last week, or I think it was last week. So that's a good candidate. That trend is already popping. So I feel like I'm a bit late on that trend. But yeah, why not continue? But the one that I'm mostly thinking about is Australian dollar against the Canadian. Australia being strong, seeing that one continuing, and then New Zealand CAD might be a one. But I'm not the one that is doing the crosses. I don't like the crosses. So
Sure.
if yen could be strong,
yeah, CAD yen.
I'll take that one.
So, so you're saying Aussie CAD, but you're not really interested in trading the crosses. So maybe dollar CAD or CAD yen. Those are kind of your primary ones to look at.
No, so the reason here is I want to find. It doesn't really matter what it's called. Just to get myself clear, it doesn't matter what it's called as long as I had the strongest against the weakest.
Sure.
But when you have declining inflation, the global outlook looks grim. Everyone is having declining inflation, generally speaking. Growth is slowing. Unemployment is going higher. That's not great. Fantastic for commodities.
Yeah, no, that makes sense. Speaking of that kind of trade, I mean, if global growth does start to slow, do you think the yen is just going to continue to blow up, or is it going to find buyers if you do start to actually see a slowdown? What do you think about the yen?
I like the small little pullback it's made today. I hope it can be deep. Deep. So I can buy it up again. I think that what's currently happening is that we are going in a certain way that is a bit too fast. So a deeper pullback would be great, but I think this one, the yen is going to go lower until they change monetary policy. They haven't done it yet. Dollar yen, which kind of is like that, what the one we have to look out for, it's just 156. It's not 160 or 158. So there's still a lot of room for yen pairs to go higher.
Yeah, yen pairs have been an interesting one. They've of the list. I mean, they've always kind of been the volatile ones, but especially this year, 2024 has been just super volatile for the yen. So you mentioned something there. You mentioned that the yen will remain weak until they change monetary policy. What kind of change are you talking about specifically?
First of all, they need to increase their interest rate. But more evidently, they need to stop spending 6 trillion yen a month buying bonds.
Sure.
It is, I don't know how many zeros that is, but it's a good amount.
So
They
so why
stopped
is
doing
that hurting them, Ivan? Because 6 trillion in yen, they're buying their own bonds. What is their objective with buying their own bonds like that for people who are kind of newer to fundamentals? Bank of Japan buying, their own bonds. What is the thought process there?
So the thought process of buying bonds is to which you're basically who you're buying it from, which are normally banks. So you are basically giving money to the banks for the bonds you're getting, and then with those money, the banks should give out should then be borrowing that out. So they are making it easier for people to borrow, to loan, and that's how we in this kind of world are trying to stimulate the economy. And that when you have lowest zero interest rate, so it's basically free to loan money, there's a lot of money to be borrowed. So that should make people borrow money. The implication of the fluctuations in the dollar yen is one, Japan is 100% reliant on importation of oil. So that's going to be more expensive. And then it's for every business that is trading with a yen has lost its value against the dollar. I think it's more than 30% just this year. I'm gonna check it was 13, sorry. 11% in 3 months is a lot for a project.
Yeah.
Or anything to move. It's way
Their
higher than CPI.
import
So
prices are very expensive, and doing business outside of Japan becomes more costly for them.
yeah. So it hurts the economy in that way where anything outside of Japan becomes very difficult or very volatile. So you want that to be stable. You want that to be quite, the same thing. And also then the oil price went to $80 or $90 a barrel. So that's not great for an economy where you're trying to create inflation, trying to create jobs.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.